Should you trade currency or cryptocurrency? And what is the difference anyway? That's what we're going to dive into today's video. So like, subscribe, hit the bell notification, and let's dive straight in. We are looking at the chart of the Euro US dollar. It's the Euro versus the US dollar, which is known as Forex, foreign exchange currency, and just currency. The answer to the question is they're both the same. When you're trading, when you're not buying the underlying asset and you're trading the market going long and short, you can make fantastic money in both cryptocurrency and currency as well. And today I'm going to use euro versus the dollar as an example. Now, the first thing always is you always want to trade in the direction of the trend because markets tend to move in fives and threes. So I've got two trend dashboards at the bottom of this chart. And the main thing to note is that the weekly momentum is bearish. And we probably have begun a bear trend, a new bear trend that's probably going to last a number of weeks and possibly even months on the downside. So I've actually gone short. I'm currently short on the Euro US dollar. But what I want to show you very quickly is something called overbalance of price. This initial move to the downside is bigger than any former move to the downside in this particular wave sequence. So that indicates to us that this over here is likely to hold as a top and expect movements to the downside. What I want to really emphasize today is trade management, and we're going to use these trend identifier dashboards to really help us make objective business decisions. And by the way, if you haven't already, you can now trial and test the trend identifier dashboard. It's like an executive assistant, £1, 30 days, with my full training on how to use it in multiple ways with some buy sell signals as well. So do check it out. It can make a big difference. But let me show you how in a practical way, because there's a lot of noise when it comes to trading. Fear, uncertainty, and doubt, fear of missing out, and the emotions. Like, we're governed by 95% of our unconscious thoughts. And if those emotions get too wild and we haven't got a mechanism to keep them in check, then you've already lost. So the trend identifier dashboard helps. So what I'm going to show you is how we have shorted this market. Still currently short in terms of making money as the market moves down. Is what we saw with the market was this nice movement to the downside. We saw this A, B, C correction, which looked like a potential wave 4. And what I said to me and my team was, if this part does not get exceeded, we want to take in a short order below this swing low and then manage our trade. There's something happening today called non-farm payroll. So we're looking to now really tighten our stop losses on this market and exit our trades pretty much. In fact, I'm due to adjust my stop loss to this swing high in just a second. So let me just draw this analysis on, because this is really important, because you ideally want to have your trading strategies to be as practical as possible. So we've got this move here. It looks like a nice 1, 2, 3, 4. And now 1, 2, 3, 4. And we're probably on the final part of this wave 5, which has not been confirmed yet. We don't know how low it's going to go. So we can put in a question mark. One of the things that I teach my students, and I implement myself, is to never, like 99.9% of the time, which is practically never, exit at a fixed price. Why? Because we don't know how far the market's going to go. But what is the trend identifier dashboard telling us? Well, it's telling us that the daily time frame is strong oversold. Now, I know to most people that might not mean anything, so I've just put in brackets. This basically updates live for you as the market is unfolding bar by bar. It says the daily downside should be limited based on the momentum. The 4-hour chart is strong bull, which is an uptrend. And the hourly chart is a bull uptrend. So now we're probably coming towards the end of a trend. And that marries up with our 1, 2, 3, 4, 5. Remember, markets tend to move in 5s and 3s. So I'm just going to do a bit of Fibonacci ratios, Fibonacci projections, because the markets tend to, it's just all driven by fear and greed, it's speculation. And we can make some really, really good money on this. In fact, we're making some decent money on this at the moment. I want it to really, really tank. But again, we don't have control over that. We only have control over risk management, risk strategy, and then managing our trades. So let's just clean this up slightly. I just want to make this into a sub-micro account. Let's just change this color to amber, and I'm just going to move the lines, right? So what I'm going to do is something really simple. It's called an external retracement. So most wave fives end in an external retracement of wave 4. And the two key ratios we want to be aware of are these two numbers over here, 1.272 and 1.618. Again, it still amazes me how it works. Fear and greed, practical psychology that we're looking at. So we're approaching this zone over here. There's a few other price ratios as well. I'll draw one of the key ones over here that we want to be aware of. A typical wave 5 zone are these two ratios, 100% and 62% of what I just drew over there. And we can see where we're in that zone. So now we want to be on high alert. We don't want to have our stop loss any higher than this point over here. So I'd like to draw my stop losses in red. So we know that's where I'm looking to exit the market. Now what I'm going to be doing after I finish this video is moving my stop loss to this swing high. And every new swing high that the market makes, like if it does this and then does this, I will then move my stop loss to this point over here. Yeah, make sense? And now I want to exit this trade today because the market is moving nicely. There's a 5-wave sequence. The trend identifier is telling us it's coming towards the end of a trend. So now it's pretty logical that this is going to unfold as is. How we've traded this again, we went short on this swing low, stop loss above here. Now our stop loss move to there, and now our stop loss is over here. So we're now locking in profits. And that's one of the things you want to do, whether you're trading crypto or the Forex market or the stock market. It's all the same. It's psychology playing out, fear and greed, and you want to have a practical trade plan that's objective. No thinking required, or minimum thinking. And the more you can have it written down as bullet points, it'll make a massive, massive difference. So if you want to take your trading to the next level, and you haven't already, actually check out my 4 Secrets Masterclass, where I talk about the 5s and the 3s, how to combine it with the momentum. And if you're interested in the momentum, we worked so hard to make this easier. Really, I've been trading for 15 years. The first 10 were actually in the Forex markets, the currency markets. And this just makes it very easy to see what's happening and to help you make business logical decisions. So if you like today's video, like, subscribe, hit the bell notification. What do you think? Forex or crypto? Well, for me, it's both. If you're holding the underlying asset, then it's crypto all day long, but knowing there's going to be massive highs and massive lows, right? That's just the nature of crypto as a young market. But if you're trading the market using stop losses, then all of a sudden it doesn't make a difference. A 3x risk reward, a 500% risk reward, a 100% risk reward is the same when it comes to currencies and cryptocurrencies. Sometimes the currencies can have some advantages because it's a more mature market. It's a more liquid market. So the spreads can be smaller. There's a few other advantages. So I personally like to do both. So let's finish on a quote from my book today. I think it's really relevant because we are tightening our stop losses in an exquisite manner when it comes to the euro US dollar trade. We're shorting that at the moment. And it's chapter 2. It's Warren Buffett. And he says, rule number 1, never lose money. Rule number 2, never forget rule number 1. Now look, taking a loss in trading is just the cost of doing business. There's no escaping it. However, we can maximize our profits and not give profits back to the market by having a trade plan. And right now, our trade plan with the euro US dollar is every new swing high, we're going to tighten our stop loss until we get stopped out to lock in the maximum amount of profit. And I know that I don't know how low it's going to go. You don't know either. And that is so important that we don't take profits at a fixed point and we let the trend unfold. So it doesn't mean we're going to get the full amount of the movement. However, there'll be times, might be 5, 10, 20% of the time, the waves just overextend. And when they do, we ideally want to be in the market for that to maximize what we're banking. That will make a big difference in our bottom line long term.